Welcome to Subramani. Please hit the bell icon, please subscribe. I'm trying to increase the number of subscribers and it's not going up. So, one of the most underrated things about investing is understanding history. You don't need to understand too much of cricketing history to play cricket, but for investing it is important for you to understand why we do certain things the way we do and why it is wrong. So let me tell you this great craze for IPO investing and telling people you can never lose money in an IPO. Now, looking at the IPO markets, we have seen the IPO market for a long time now. It's at least what, 45 years, 50 years old, from a big retail participation. We must thank George Fernandez for kicking out many of these FERA companies, or what they used to be called, and they were forced to dilute. That was the time when big retail participation started happening, and then the god of them all, Dhirubhai Ambani, came out with amazingly big IPOs. The IPOs were so big that they were bigger than what the Tata Group and all had ever done, and he opened the market and said this kind of money is there in India. So right, I think 1977 was the first IPO of Reliance. 1977, 78, 79 is when all the FERA issues, the Colgate, Pfizer, Siemens, Cummins, all of them were forced to dilute. Kodak, all those companies came out with an IPO, and that was a time when people made tons of money. Why am I saying this? Because then there was something called the controller of capital issues, and typical bureaucratic, I think I can even say that how much time you spend in Delhi lobbying, and I'm saying lobbying in the crudest sense, but I'm not using the real Christian word for it. Decided what premium you got. So there was this company called Advani Orlecon, now it's called Ador, a good company, which said, oh, we should get a good price because we have got a good book value. They got 2 rupees premium, 10 plus 2, right? 12 rupees is when is what they got priced at. Colgate got priced at 15 rupees premium. I'm sure it had a higher book value than that. And Garden Bareli, which many people would not have even heard of, got a price of 85 rupees or something like that. And we all used to be amused, saying it was so much of a lottery as to what price you got, depended on your merchant banker, what he did in Delhi, how long he stayed, whom he wined, dined, entertained, sent packets to. Based on that, you were getting your pricing, but you were more or less sure that if you got allotment, you would make money. A company like, I think Tata Timken or Tata Bearings, something got oversubscribed 4,000 times, I'm talking from memory. And for a Morgan Stanley mutual fund, there were queues of people standing in line to take that money, to invest that money. So we have seen all these kind of things happening in the capital markets. So CCI controlled at what price you got the share. So you got Colgate at 25 rupees and it listed at 90. So if you bought at 25, you sold at 90, you made capital gains. Or if you bought at 25 and held on till today, it is worth a few lakhs, right? Your 5,000 may be worth, or your 1,250 may be worth, say, a crore today. Right, those things happened. That was controller of capital issues. Then controller of capital issues went away and SEBI came in, and SEBI said this is a formula, you can price it at any price, you can come out with an IPO, and it's up to you, but you should have a 3-year profit making track record and blah blah blah, all these things you had to have. But as usual, the promoter and his accountants could paint a rosy picture and collect as much money as they want, but there was no CCI doing the pricing, it was SEBI doing the pricing. And SEBI really didn't do much pricing. They said whatever price you think you can get from the market, you will be able to take, and you will be able to. So now this was a time when you got an allotment, maybe you made money, maybe you didn't, depending on how smart the promoters were and at what cycle you were. For example, I remember Maruti came with a price of 125 rupees and I think it opened at 600 rupees. That is just because we were at the end of a bear market, and I don't think the great merchant banker had the guts to price it above that, because if he had the guts, he would have priced it at 625, knowing the merchant banker, knowing merchant bankers in general. And so yes, some were reasonably priced, some were badly priced, some which came in the bull market had to be withdrawn because people would not subscribe. So all these things happened with SEBI. Then one day, in its great wisdom, SEBI said, even if you are loss making, you can come out with an IPO, NFO, OFS, whatever you want to call it, and you can get listed. It does not matter that you are making losses, as long as some anchor investors took a percentage. Believe me, it's very difficult for people to understand what are those rules and regulations. But yes, a company making losses could now come with an IPO. Did it help? Of course it helped. It helped all the venture capitalists and private equity guys to get an exit, because every Indian now turned a venture capitalist. It didn't matter what was the fair price of a Nykaa or a Paytm or Zomato. It didn't matter. They would just buy it at any price, simply because their fathers and grandfathers told them you can never lose money in an IPO, right? So because his father made some money maybe in grandfather maybe made money in Colgate or whatever, doesn't really matter. So these people came in and said, I can never lose money in an IPO. That old theory, which was true maybe in the 70s and mid 80s, whole of 80s perhaps, and then they brought it and said you can't lose money. But it is wrong. There are very many fly-by-night operators who said we will put up a steel mill or we'll do anything. Company would be based in Baroda or Rajkot, and there would be goats tied there when you went to see what was really happening. So there was a big unlisted market where they would tell you, oh, buy this already 6 rupees on chal raha hai. The company is coming out at 10 rupees, but you will be able to sell it at 16, right? So this kind of a thing. I remember during Reliance Power issue, there was a secondary market illegally saying this could even open at 1000 rupees. I mean, this happened in a very famous press conference. I'm not naming the people who made these stupid statements and nodded and said, yes, it's possible. Well, it didn't open. I don't think it's more than 12 rupees or 13 rupees now. I have not seen the price lately, but that's what happened. So you could have lost a lot of money applying in Reliance Power IPO. I think you should go and have a look at subramani.com. And I have written about the Reliance Power IPO at the time of the IPO, not now. I said I think it deserves a price of 75 rupees and not 450 rupees. So I didn't subscribe, I didn't buy it, but it was considered to be a great phenomena of introducing school teachers from Sikkim and Assam and Arunachal Pradesh and all those places. They all came into the market because of this huge mega IPO. So what I am trying to say is, there is no thing to believe that you will not lose money in an IPO. IPO is just one way of coming into the market. In fact, good chance that you will lose money in an OFS. OFS is overpriced for sure. That's how a friend of mine described, because OFS is it's a concept where a venture capitalist comes into a company, invests at 10 rupees or 20 rupees or 200 rupees, and then comes out with a OFS or offer for sale at 2700 rupees. And there are people willing to buy, saying, oh, this is the story, we will believe. So they believe. Now, if you are an employee of that company, you are in a dilemma, saying, should I keep all the shares? Should I sell partly? Should I, what should I do? Because I don't know, because the pricing has been such that it looks like a big fortune on my plate. I got 11 crores worth of shares. Should I sell off everything? Well, if you were a Paytm employee and you were smart enough to sell off everything, you would have made a lot of money and you'll be laughing all the way to the bank. But for any employee also, you maybe you sell partially, you sell some regularly, and some you hold for life. So all those decisions are necessary, but sorry, I'm digressing. Today, pricing in an IPO or in the secondary market is independent of the regulator. There is no regulator sitting there saying, you make me happy and I'll give you a good price. It's not true. So at any price, and for me, pricing is a moral issue. If I have taken the shares at 10 rupees 6 months ago and then I do an IPO at 2700 rupees, something is wrong with me morally. Forget whether it can legally be done, right? So every OFS, which is definitely overpriced for sure range, is worth avoiding, and you might as well wait for it to get listed and then buy, because I don't apply in IPOs for two reasons. That one is you get a very small allotment if the issue is successful, and you get a big allotment if the issue is a failure. Very good chance that you will be able to pick it up from the market. Take my case of HDFC Limited, HDFC Bank. The IPO came at 10, I got 200 shares, but it got listed at 40, and at 40 I bought the share at 40. So after, if you buy at 10 or you buy at 40, it's not that, it's the question of, was a good company, was the valuation fair, did you buy it, did you hold on for a long time, and did it compound for you? If you think you can answer all these questions reasonably fairly, then you should apply for IPOs or OFS, whatever it is. I think also the odds are terribly against you, because here we are talking of smart investment bankers maybe owning the company, or at least you advising the company. So their timing of when to sell and what price is much better than what you and I know about the company. So applying in a IPO today makes no sense. Be careful, but because many people who have got allotment of maybe small amount of shares also, like DMart or Avenue Supermart as it's called in the market, these companies have made a lot of money. So even if you got 50 shares or 100 shares, you made money. So people think, oh, every IPO is good. It's not. Be warned. Thank you.